Good evening to real estate consumers across Australia. This is Terry Ryder from Hotspotting, introducing what I hope will be the first of a regular series of Q&A sessions, question and answers, where you have the opportunity to throw your questions about real estate matters at me. For the next 30 minutes, 60 minutes, however long the questions keep coming in, really, I'm going to be sitting here in this live broadcast fielding questions. If you have a question for me on any topic to do with residential real estate anywhere in Australia, or on any issue that's bothering you in the real estate sector, just write in the comment section that you see on your screen, and hopefully your questions and your comments will pop up on the screen in front of me, and I'll be able to answer them. You may be interested in the best places to buy real estate, or the places to avoid. You may have a particular question about a particular location that you're thinking of buying in or selling in. There may be issues in the media, or you may have some issues with the media itself. Certainly, you know, if you've been following my broadcasts recently, that I have some major issues with the way that mainstream media reports the housing sector and the issues that affect it, particularly the affordability issue, which is one that just keeps popping up in media. Journalists seem to obsess over it with all kinds of pet solutions and sweeping statements about the housing affordability issue and how it might be improved or otherwise. So write your comments or your questions about anything to do with residential real estate in the comment section, and I look forward to answer your questions as they come through. In the meantime, I'm just going to, while I'm waiting for questions to come up, I'm going to just touch on some of the issues. One of the ones that I have referred to a number of times in these broadcasts recently is the way in which media misreports real estate issues, none more so than the area of what's happening with house prices. And one of the problems is that many of the people writing the articles don't really have a great deal of expertise in real estate, and often all they're doing is regurgitating press release material from people who have an interest in having their propaganda published, and they quite often misinterpret what they're seeing in the press releases, and they regurgitate it as fact. One of the greatest areas of misinformation surrounds median prices, and many writers in newspapers interpret a 10% change in the median price as a 10% rise in prices or a 10% rise in property values in a given area. And that simply isn't the case. Very often a change in median price has really got nothing to do with what's happening with property values in that particular area. And often there are distortions caused by low sale samples. Any location that has fewer than 30 sales in a year, the median price is going to be a little bit suspect. And if a location has only 10 or 12 sales in a year, then the median price is probably going to be rubbish. So any annual change in that median price compared to last year will be a nonsense. And we saw an article in one of the major media outlets quite recently talking about what they called skyrocketing prices in the Hobart area and Tasmania generally, and they had a headline: home prices in these suburbs have grown by 30% in 1 year. Well, actually home prices haven't grown by that much in these areas. The median price has changed, but in every instant that they raised, every example that they raised in the article, it was a distortion caused by a very small sales sample. Eagle Hawk Neck only had 14 sales in the last 12 months. So the 40% change in the median price was misleading, absolute nonsense. In the suburb of Hobart, which is mainly apartments and office buildings and retail, there were only 11 house sales. The median price changed 37%, but that certainly doesn't mean that property values are rising 37% in that suburb. Herdsman's Cove, another suburb which only had 20 house sales, but according to this article, this median price rose 35%, but that certainly doesn't mean that property values are rising to that degree. And the small town of Snug had only 14 sales, so its 33% change in its median price could be taken with a grain of salt. But these kind of distorted figures are reported as evidence of rising property values. We see this a lot in mainstream media, many of our newspapers and other mainstream media outlets, and it's important to disregard them. If the sales sample is that small, the median price data is going to be distorted. So we've got questions coming in now, and so I'm going to start dealing with them as they come in. So if I appear to be looking away and being distracted, it's because I'm reading what's on the screen. Andrew has put in a comment. Let's see, I'm surprised why there is not more coverage on solid, affordable regional properties. There's so many in every state, good solid returns, maybe not incredible growth, but affordable. What are your thoughts, Terry? Well, yeah, really good point, Andrew, and that's certainly a topic that I have some strong views on. I think that property investors around Australia tend to ignore regional Australia and the prospects that exist there to buy well and get a really, really good result. Quite often, if you can find the right regional centre, the right regional city, and I'm not suggesting that all regional locations are worth considering, but certainly the best of them are. The best of the regional centres I see as a win-win-win situation for property investors. Low entry price compared to the capital cities, usually much better rental returns, and really good prospects for growth if you buy in the right places. So you need to be looking for a regional centre that's got a diverse economy, a growing population, good transport links, spending on infrastructure, evidence of growth in the economy, factors, all the factors that drive real estate values need to be in place. You certainly don't want one industry towns like mining towns or a lot of coastal locations that seduce property investors around Australia have a single industry, which is the tourism industry, and property markets in locations where the main industry is tourism seldom have long-term sustainable growth in property values. You need places with diverse economies, and quite often in the regional areas, Andrew, we find that it's the so-called boring places, the ones that aren't sexy, not the coastal glitzy places like the Gold Coast or Byron Bay or Noosa, but it's really the workaday, more industrial type regional cities that have the strongest and most sustainable property markets. Places perhaps like Toowoomba in Queensland, Dubbo in New South Wales. Just looking at your comment, you mentioned Dubbo and Toowoomba, well spotted. Ballarat, you mentioned in Victoria, another place which has not only got all the qualities that I talk about, but it's a rising market at the moment. It's a very active market. Many investors from Melbourne have seen that the Melbourne cycle has almost run its course. The prices are very high, yields are very low, so they're looking elsewhere, and they don't have to look very far because not far from the capital city is the very solid regional city of Ballarat, and its market is rising, very affordable, good rental yields and all of that. So all the factors that you refer to, certainly agree with your comment that investors generally should be paying a little bit more attention to the regional areas. And just one further comment before I move on to another question or comment from somebody out there watching. Right now, I would say the strongest jurisdiction in Australia, if we divide Australia into capital cities and then the regional areas in each state, so we have in New South Wales the jurisdiction of Sydney and the jurisdiction of regional New South Wales, and the same in all the other states. The strongest single jurisdiction in terms of the number of locations that have rising markets is regional New South Wales, far more than Sydney does now. Sydney's run its course, but the growth has rippled out to some of the regional cities of Australia. Newcastle had phenomenal growth last year and still growing strongly. Markets like Dubbo, you mentioned in your question, Orange, Wagga Wagga, Goulburn, Tamworth, Port Macquarie. There are lots of strong regional centres out there worthy of consideration. Now moving on to another question, Steve has made the comment. If you were to buy, would you buy now, and where would you, or would you wait with the current economic uncertainty? What's your golden rule for property investment? Okay, I'll deal with the first question first, Stephen. Would I buy now? Well, certainly I would. I don't see any particular economic uncertainty. I think the Australian economy has enduring strength. There's always upheaval coming in from some quarter, but the Australian economy has a lot of resilience. It's been growing in a sustainable way for a quarter of a century without recession. I think the key factor relating to that point that you're raising is that there's no one property market in Australia. Economists keep talking about the Australian property market, but there's no such animal. We always have different scenarios playing out around Australia at any one time, which means that it's always a good time to buy somewhere in Australia, because there's always locations where the market is poised to rise but hasn't yet shown a great deal of price growth, and that's the ideal time to buy in any location. So while Sydney's run its course and it's 4 years in the spotlight has run out, and we're now seeing evidence of a reduction of price growth, and in some cases some small decline in values. There are other places which are on a different part of the cycle. Hobart's still going crazy. Canberra is rising. Perth, which has been going backwards, is starting to rise. Adelaide is poised to do much better than it has in recent years, and I think also Brisbane. So, and that's just the capital cities. Darwin, which still has very negative statistics, but I think there's signs in its economy that it's going to start getting towards the recovery phase quite soon. And then there's lots of regional centres which are at different parts of the cycle. While Sydney is winding down, some parts of New South Wales regional areas are just starting to crank up. Newcastle was very strong last year and into this year. Some other parts of that region, the Hunter region, the towns there like Maitland and Cessnock, just starting to rise. And there's lots of possibilities like that to consider around Australia. So in simple terms, it's always a good time to buy somewhere in Australia. You just got to find that somewhere. And the ideal place is a market that's poised for growth but hasn't yet started to rise strongly. And you can usually detect those places by understanding what's going on in the local economy, what's been spent on infrastructure, by charting sales volumes to see patterns of rising activity. So you ask my golden rule for property investment. I think the first of my golden rules is stop reading newspapers, and I'm quite serious about that. I say it often, but I mean it. The most important thing to to invest in real estate successfully is to have access to really good information. And the problem is that the vast majority of Australians who attempt property investment get their information by reading newspapers or tapping into other forms of mainstream media. And that's the worst thing you can do in terms of accumulating knowledge and accessing information, because most of what's published is misinformation, because the people writing the articles aren't experts, and they're very often, in most cases, recycling press release propaganda from someone who's got a vested interest in the message. So what you're receiving in mainstream media isn't fact. It's often misreporting, sensationalism, usually negative, or some other form of misinformation. So you need to find trusted, reliable sources of information, and there are places out there that you can get good information to help you make sound investment decisions. And I like to think that my website, hotspotting.com.au, is one of those places. Another part of Stephen's question is, how do you know if you're buying a good investment? How do you measure it? Yeah, well, in terms of a location, some of the factors that I spoke about earlier in terms of what the qualities you look for in a regional city: a diverse economy, a growing population, good transport links, spending on infrastructure, all of those basic things need to be in place for a location to be a good location. Another criteria I sometimes apply is what I call the power combination: a location that's got affordability, good infrastructure, proximity to jobs nodes. That's what I call the power combination in terms of leading to price growth. So those are factors to look for. And when you find locations that have those qualities, it then comes down to street level, and the basics there is proximity to the basics. It's not rocket science. You want to be close, but not too close, to schools, to shopping, to public transport, to medical services. And ideally, your location will be within striking distance of major jobs nodes, because people do like to live close to where they work. And always remember, very key thing, because this is another piece of misinformation that you'll get from media, remember that the vast majority of people don't work in the CBD of the capital city. Most of the jobs in our capital cities are out there in the suburbs, increasingly so, in fact. And very often when people are living in the outer suburbs, they're actually working out there as well, and they've got no reason to ever go to the CBD. They don't shop there, they don't work there. They might go there for entertainment occasionally, but most people's lives are out there in the suburbs where they live. And it's proximity to those basic things: schools, shopping centres, public transport, medical services, and jobs nodes. Those are the things to look for. Katie has just asked a question. I was talking there about regional New South Wales as an example. What about regional Queensland? Yeah, regional Queensland is got lots of good places to consider, but you need to be very, very selective and very careful, because regional Queensland has the extremes of real estate. It has some of the really good places to buy, and it's got some of the really, really bad ones, places to avoid. Queensland is an economy that has a strong component of the resources sector, and there are many towns and regional centres out there whose economies are very much aligned with the cycles of the resources sector, which is very volatile, lots of peaks and troughs, as we have seen. And so in the most recent resources investment boom, developers piled into many regional towns and cities in Queensland and built too much new supply, expecting lots of demand from people working for mining companies in places like Gladstone and Moranbah, the coal mining town, Emerald, Chinchilla in the Surat Basin, not understanding that a lot of those workers were going to be fly-in, fly-out workers. And when they fly in, they stay at accommodation camps built by the mining companies. And when they finish their shift, they fly home. And they weren't buying or renting local accommodation. So we ended up with big oversupplies and huge vacancies in many of those places, which only now, after maybe 4 years or so, starting to look like recovering and rising again. So those are some of the negatives, but also in regional Queensland, we have some very, very strong places that are good to buy. The Sunshine Coast is a growth economy. It's a transition economy, big spending on infrastructure. It's really looking strong, and the property market is responding. Townsville is a regional centre with lots of diversity, great diversity, in fact, to its economy. It's been through a bit of a slump. It's been a little bit affected by the resources downturn, but it's starting to come back now. Big spending on infrastructure coming up. It's been slated as the headquarters for some very, very major mining projects. If those happen, you'll get an economic boost. And prices are down after a few years of going backwards. You just got to remember in places like that the insurance costs are pretty high, because they tend to get whacked every so often by cyclones. Toowoomba's a very solid place. Cairns is a pretty solid market. Very good rental yields to be had in Cairns, although the economy is still perhaps a little bit too reliant on the tourism industry, but its diversification is improving. Lots of places in Queensland to consider, but be mindful there are also places to avoid. Michael has raised, and kind of relevant to the discussion we're now having about regional Queensland, how about Gladstone now? Good question. Gladstone is such a spectacular example of the good and bad of real estate. As many of you may know, Gladstone, which is an industrial city, probably Australia's #1 industrial city, with a major export port, lots of infrastructure there, most of it relating to the resources sector. 3 very, very large gas plants were under construction at the one time, totaling an investment of about $60 billion. Now, in a city the size of Gladstone, that should have been the mother of all property booms, but two things happened. One, developers large and small piled into there expecting a boom and built way too much new product. And at the same time, the proponents of those gas projects built accommodation camps, and many of the tens of thousands of workers who came into Gladstone to work in those construction projects weren't actually renting local accommodation or buying it. They were living in the workers' camps. So we ended up with a massive oversupply in Gladstone, vacancies above 10%. And for the last perhaps 4 or more years, rents have been falling, and so have property values a lot. But there are now signs of it coming back. Vacancies were above 10%, and they've been trending steadily downwards over the last 18 months. And now Gladstone vacancies are down, heading towards 4%. Once they get to 3% and below, then we can start to believe that the worst is really over, and that rents and property values may start to rise again. At the same time, there are a number of significant projects in planning for Gladstone of various sorts, retail projects, tourism projects, some industrial projects, energy projects. The thing that I like about them is they're not absolutely massive projects. The problem with what happened to Gladstone previously is that the projects were so big they can create this huge distortion in the economy and in the property market, whereas the projects that are coming up now are of small to moderate size, and so the people working in those projects coming to Gladstone with new jobs created by them are more likely to be actually buying and renting local accommodation. So there is a prospect for Gladstone to improve, Michael, from this point onwards. We'll start to see some glimmer of recovery maybe later this year. Just looking at some of the other questions. Robert is asking, what are your thoughts on North Lakes and Bulimba over the next few years? Well, two very different places, not exactly close to one another, so they're two separate markets. North Lakes, master plan community or suburb created by a master plan development, which is a work in progress. Quite a substantial project, which has brought a lot of new, excellent, I think, infrastructure into that general area. We're talking about the north of Brisbane, the northern suburbs in the Moreton Bay local government area, probably the strongest, most active market in Brisbane right now in terms of sales activity. It's about affordability and pretty good infrastructure. And one of the reasons why the infrastructure up there is good is because of North Lakes. It's introduced major modern retail, including bulky goods retail. There's a new IKEA superstore up there, for example. I try really hard not to look at it because I don't want to be drawn into it, because I know if I do, I'll spend way too much money. Other retail, facilities like schools, libraries, good quality residential, and it's evolving. So that area is generally speaking a good, strong area moving forward. Not too far from there, there's going to be a new university campus built. The site's acquired, it's there, not far from North Lakes, and when that facility is built and starts to evolve, there's going to be lots of, it's going to generate a lot of demand for rental and also purchase in that general area. So I think the future's pretty good there. Bulimba, I know pretty well. I used to live there before I moved to where I currently live, which is Maloney in the Sunshine Coast hinterland. Bulimba in those days was very much underrated, and it's been gentrified since then in a major way. Oxford Street, Bulimba is probably one of the trendiest retail strips in all of Brisbane now, and property values have risen a lot. And I think I just see it as being one of those really solid markets. It's quite close to the centre of the city. It's close to the river, which can be a disadvantage, I suppose, because the river does flood every so often, but it is a feature. It means you can get around from, if you live there, you can get around Brisbane by river ferry as well as by bus. And not too far away, there are train stations down at Morningside, I think, from memory. So that, that's a middle market area with, lots of character homes on big blocks of land and a very trendy cafe culture lifestyle strip, Oxford Street down the middle. So it's got a pretty solid future, I would suggest. just looking at some of the other questions coming in. Unfortunately, there's lots of them. And yeah, Decca's asking, what do you think of Mildura? How would a 3-bedroom investment property there for 10 years and its growth has been disappointing due to a number of proposed projects falling over? Do you see this changing? I know exactly what you mean, Decca. We've had Mildura on our radar screen for a long time, and there have been a number of big projects like wind farms and solar farms and various other major projects proposed out there, and they just haven't happened. And the expected uplift in the economy and therefore the property market that would have resulted from them hasn't been seen yet. But there's still hope, particularly those projects that are alternative energy, because there is an absolute explosion around Australia of major alternative energy projects now. They seem to be very much in vogue. They seem to be more financially viable. And we've got wind farms, we've got solar farms, we've got various hybrid type farms. They're popping up in Queensland, they're popping up in South Australia. Port Augusta, for example, is a particular centre for that type of development. Lots of proposals there. So there is some hope that some of those projects in the Mildura area will be revived. In the meantime, it's an important regional centre for that Sunraysia region, agricultural region in Victoria, and but it really does need some of those proposed projects to come back online and get started to bring jobs into the area and start to drive the property market, which is otherwise one of the most affordable in regional Australia. Very low prices relative to other places. So yeah, we are watching it. There are proposals, infrastructure projects impacting on Mildura. We just need some of them to start, and it will activate the property market there. Janine saying, Terry, I was hoping you could point me in the right direction to do what's best for my family. Investment types, which I'm looking for a family home to set up my my family. Let's just go further down. Currently live in Western Sydney, but looking at moving, as is everyone, to either Gold Coast or the Sunshine Coast. I think that's what your abbreviations mean, Janine. This will be a family home for my partner, and 2 sons. Look, if you're thinking Southeast Queensland, you're not alone. One of the trends in real estate that we're seeing is that Sydney is losing population in an interstate migration sense. It's gaining population from overseas migrants coming in, so it's still got a growing population for that reason. But in terms of interstate migration, there's a net loss out of Sydney heading to places like Southeast Queensland, and that's partly because of housing affordability. It's partly because of just the general cost of living in Sydney, which is higher than anywhere else, it seems to me. And people are heading to Southeast Queensland looking for job opportunities and a different lifestyle and cheaper real estate, cheaper everything. So you're not the only person thinking of that move, and it's not a bad move to make. I'm a little bit biased. I'm not a huge fan of the Gold Coast, but a lot of people are, and a lot of people love that lifestyle. If you're heading there and you want to buy a family home that's going to grow in value, avoid the high-rise markets and look for the genuine residential suburbs, because there is growth to be found there, whereas the high-rise markets are perpetually oversupplied, and the median price for an apartment in Surfers Paradise today is lower than it was 10 years ago, which says something. The Sunshine Coast I like a lot, and that's where I've chosen to live, although I'm up in the hinterland, the hills, not down on the coast. But the Sunshine Coast itself is one of the major transition economies in Australia. So it's got a lot of jobs being created by infrastructure spending, by the emergence of this massive new medical precinct based around a $2 billion hospital, which is now being completed and up and running, and other things springing up around it. It's a bit cheaper than the Gold Coast, still quite affordable, great lifestyle. Traffic's becoming a bit of a problem there, but nevertheless, it is I think a really good place. It's got good infrastructure and it's improving. So certainly, if that's what you're thinking, Janine, it's something to explore. In terms of buying wealth property. We do have a regional, top 5 regional Queensland hotspots report. We'll give you some ideas, and includes the Sunshine Coast as one of the locations that we are recommending to be considered at the moment. So you might get a copy of that report and have a read and get some ideas of good places to live, as well as places that are going to grow in value. And of course, even though you're buying a home, you still do want it to grow in value because it may be your biggest asset moving forward. You mentioned looking to spend $720,000 4-bedroom study. Well, on the Sunshine Coast, you'll be able to buy a really good quality home for those prices. There's quite a range, like anywhere else, but good suburbs. If you want to be close to the beach, you can certainly buy good property, walk to the beach, and lots of places along the Sunshine Coast Strip. And you'll probably find some pretty good property on the Gold Coast if you prefer that. Some people do. Andrew, again, talking Queensland, the Sunshine Coast is a poor performer on past numbers due to being only reliant on tourism, small business, etc. Where we see prices going. Well, Andrew, you're absolutely right. The Sunshine Coast has been a poor performer in the past. And in the past, I've had the Sunshine Coast in my no-go zones report. In fact, I was in there for about 5 years, I think. But now it's in my, has been recently in our national top 10 best buys report. Why the change? Because I've lived in the region all of that time, including when I had it in the no-go zones report. Wasn't helping my own asset values very much when I did that. But the thing is, the Sunshine Coast is undergoing fundamental change. It's a transition economy, as I've just said. There's about if you add up all the projects, infrastructure spending, the new medical precinct, the new CBD, spending on the airport, spending on the Bruce Highway in the Sunshine Coast region, and a whole heap of other things, it adds up to more than $20 billion. And that's massive for a regional city the size of the Sunshine Coast. And that's the big difference. And so I think there is going to be, well, we're already seeing price growth. Double-digit growth in median prices, many suburbs on the Sunshine Coast now as a result of that. And I think it's going to be sustainable because it's not just a tourist town anymore. That was its problem in the past. It was all about tourism and construction related to that. Now it's got this big medical precinct. It's also got a university which is expanding all the time, and other things that are happening that make the Sunshine Coast a more diverse economy and a more rounded city. So I think it's going to be a growth city moving forward, whereas it hasn't been in the past. I think you're making a point there, Andrew, about lots of new product being built. You've always got to be careful in any market about, when there's a growth market, developers seem to pile in and just build too much new stuff. And you've got to be careful always, not just in the Sunshine Coast, but anywhere that you buy. Keep an eye not only current vacancy rates, but building approvals, because it gives you a clue to future vacancy rates. If there's a big uplift in the number of building approvals in an area over a couple of years, it could be a clue to future oversupply, something to look out for. Ryan, you're asking, what do I think of Canberra units? Look, Canberra generally, I think, is a good place to consider. I'm just not so sure about the unit market. In fact, we see quite a big difference when we look at the sales activity in Canberra. The housing markets are rising. The apartment market is a little bit sort of lukewarm. And when you look at the growth numbers, whether it's for rentals or for prices, the growth factors are much stronger for the housing market areas than for the apartment markets. That's probably true in a lot of other places as well. It's just so easy for apartment markets to be oversupplied. Canberra's been through a period of oversupply of apartments not so long ago, and it affects long-term capital growth because it's just so much easier to oversupply an apartment market than there's a housing market, although you can have housing oversupply as well. The thing about the housing market in Canberra is that the supply of land on which to build new houses is so controlled by the ACT government. They kind of drip feed land supply in a way, I rather cynically believe, to keep prices high because they get more revenue that way. So the the supply of new land in Canberra is always less than the demand by a factor of, oh, God knows what. It's just a massive undersupply. If they have a release of 50 blocks, there'll probably be 1,000 applications, or 1,000 people trying to buy those 50 blocks. So there's undersupply, generally speaking, in Canberra housing, but there's periods of oversupply in units. But generally, Canberra is a growth market. One forecaster, BIS Oxford Economics, recently did its forecast for the next 3 years and predicted that Canberra, generally speaking, would have the highest price growth of all the Australian capital cities for the next 3 years. So that's just one opinion. I do think Canberra's going to be up there. It's rising now, and it's always solid. It's the Goldilocks of Australian real estate, as far as I'm concerned. Not too hot, not too cold, just right, because it's a government town and it's got very low, always has the lowest unemployment in Australia and always has the highest average incomes because of the nature of the place that Canberra is. Dean, what's your view on mining towns like in the Surat Basin? Mining activity seems to be picking up, etc., etc. Look, I touched on it a little bit earlier, Dean, but the Surat Basin is one of those places where, and I referred to it earlier, where there was a resources boom happening, in their case, sort of coal seam gas primarily, but also some coal mining activity. And towns like Chinchilla and Dalby and Roma and Miles, where there were lots of jobs coming in to work on the coal seam gas projects, and small and medium-sized developers built a lot of new product, expecting lots of rental demand. But again, there was this new factor of accommodation camps, and that just killed the market. There's lots of new product for which there wasn't really as much demand as everyone expected. And so vacancies went incredibly high in some of those places. Chinchilla, I just seem to recall vacancies at one point were like 30%. And obviously that killed the market in a major way. But the evidence is that these places are now starting to come back. As you have observed, Dean, there is a revival in the resources sector. It's picking up quite strongly. Projects that were put on the back burner in places like Queensland are now being brought back online. So lots of jobs. Last year, according to the official figures, Queensland created more jobs than any other state or territory in Australia by quite a wide margin. And not all of that was in the resources sector. Agriculture's been strong, tourism's been strong, but the revival in the resources sector is part of that, and that's ongoing. And we're starting to see vacancies come down a lot in some of those towns I mentioned. Roma, I looked at just the other day, and there's we'll just use Roma as an example. Its vacancies were 12 or 15% at one point. Now they're down to, I just can't quite remember exactly, but maybe sort of 5% now. So the trend is in the right direction. And just about a week ago, Santos, very big resources company, announced that it's going to be investing $750 million in the Roma East gas fields that it controls, more coal seam gas activity. The key question again is, will all the workers coming into work in those projects be fly-in, fly-out workers staying in accommodation camps, or will they actually be renting local accommodation? There will be some local accommodation demand, but I suspect it's going to be the same thing again when most of those workers aren't really going to be beneficial to the local property market. Nevertheless, we're seeing a rise in sales activity in towns like Dalby, for example, and so those markets are starting to come back as the resources sector revives in the Surat Basin. Another part of your question, Dean, was Wandoan. Wandoan is a very small town where was it Glencore, I think, was proposing a coal mine, something like a $6 billion coal mine with a rail link from there to Gladstone to the export port, and it didn't happen. So all that expectation, and it sounds like you might have been one of those who bought investment property there expecting that to happen, and well, it hasn't happened yet. But it was in the news a little bit this week where there is a major mine being proposed, and the Glencore big mine is still sitting there on the books waiting for the right time to do it. As the resources sector revives, it may still happen, and then one Darwin will turn from being a very sleepy, very small town into maybe a mini boom town. But always be aware that those kind of places, it's very volatile. It's not going to last forever. It's going to be places like that. It's a case of buying and selling at the right time, and it's risky. It's really risky, as so many people have found in places like that, and Moranbah being a spectacular example. So a question from Dirk. Where would be the best spots in Australia to buy a duplex product for around 700,000 and flip for say 800,000? Yeah, I'm not sure I can answer that, Dirk. I'm not sure on the basis on which you would buy for 700 and quickly sell it for 800. I guess you're wanting to do that in obviously a market that's growing strongly, to give you that sort of capital growth in a short period of time. I'm a little bit skeptical about that kind of duplex product, mainly because they tend to be, new duplexes are springing up in the new development areas. One that springs to mind is Logan City, in the southern suburbs of Brisbane. Logan City is the local government area that bridges the gap between Brisbane City and the Gold Coast City. It's generally affordable, in many cases down market type suburbs, but nevertheless it's been a good place to buy because of its affordability and rental yields and good infrastructure, and easy to get up to Brisbane and down to the Gold Coast. There's rail links and big motorway links in both directions, lots of major retail and other infrastructure. But the new development areas out west is where we're seeing lots of duplex products being built, and the sort of product that I think you're talking about. But the problem is that they're being built are the new development areas, and there's not much infrastructure there. I'd much rather buy the established product in the older suburbs of Logan City, where you're close to the train stations, for example, and the motorways, and the motorway is where the big retail is. So there's jobs there, and there's also good shopping there. So some people are being seduced by the bright, shiny new duplex products and what appears to be 7 or 8% rental yields, because you've got two incomes off the one property, and that can appear attractive, but the risk is, where's the capital growth going to come from, and the demand for a future sale, given that there's, at this stage anyway, very little infrastructure out there, and it's a long way from the train stations and a long way from the motorways. So that needs to be kept in mind. Beyond that, I don't really have any excellent answers to that question, Dirk. You're looking to buy in growth areas around Australia. Yeah, I don't know. I really don't know that it's the best strategy. I think a better strategy is to look for places which have a dwelling on a block of land where the zoning allows you to do more, build a second dwelling or townhouses or a granny flat, add value that way, and accelerate the capital growth process. And a good place to be considering right now would be Perth, which is starting to rise after prices have gone backwards. So the buying is good. The competition at the moment isn't that strong. There's also plenty of opportunities for splitter block type opportunities in Queensland, particularly Brisbane. So I'd be more inclined to be looking for those sorts of opportunities than a duplex, which is going to miraculously rise a lot in value and give you a quick flipping profit. Ryan's asking the question, where's the best place to buy an investment for a 5% yield for $250,000? I'll just, Ryan, I'll just give you what pops into my head. to answer that question, I'd like to be able to go away and do a little bit of research and come back to you. But what's in my head, firstly, is Ballart in Victoria. A very active market at the moment. Prices are rising. I think you can still buy as low as 250,000. Well, that's probably becoming harder to do. And rental yields are sort of 5.5%, in some cases 6%, I think. Depend where you're buying Ballarat. So that's a possibility. South Australia, Adelaide is actually a place you could consider, I think, and I've said it many times in this medium and in my writing, that I think Adelaide's the most underrated city property market in Australia right now. And I think there's things building in the South Australian economy which is going to take it to another level, and positive things. And so I think Adelaide offers affordability and good rental yields and the prospects for growth if the things I see brewing in the South Australian economy actually come to pass, and I think they will. Now, some parts of the Adelaide market you can buy at the sort of prices you're talking about, Ryan, in the mid 200,000s. In fact, there are suburbs in the north of Adelaide where median prices are below 200,000 and the rental yields are 5 and 6%. Pretty down market real estate, but the research shows that what I call ugly real estate grows in value. In fact, and can often grow quite well in value. There's some research out just in the last week showing that having a high crime rate in your area is not a barrier to good, strong capital growth, particularly if it's an area that's undergoing gentrification. Some of the best capital growth, according to this research, was in areas with above average crime rates. As long as they're affordable, there's a future in those areas. People will buy there and want to live there, regardless of the crime statistics, and you're going to get some good capital growth. So some of those locations in the north of Adelaide, in local government areas like Playford and Salisbury, some very down market suburbs, but very cheap, good rental yields, lots of big jobs nodes up there like the Edinburgh Defence Base and big industrial estates where there are lots of jobs. There's other parts around the Adelaide market where you can buy in those sorts of prices. Middle market prices in Adelaide are like, say, 500,000, whereas in Sydney it's bottom of the market. So good level of affordability there. So for that kind of investment, Ryan, I think I'd be looking at Adelaide. And the other alternative is Hobart. That market's very strong at the moment, and it's probably become very hard to find property but you still can find $250,000 property there and the sort of rental yields that you're looking for. So I'd say Adelaide first, Hobart second, and then some of the regional areas such as Ballarat that I mentioned is one that springs to mind. Janet asking a question: what do you think of Townsville? When do you think Townsville might turn around? We have 3 properties in Townsville that are performing badly, rents dropping and stagnant sale price. Well, Janet, you're absolutely right, but that's the present situation. In the recent past, I think the future is a lot brighter. I'll be very surprised if Townsville doesn't go forward from this point. Now, the clear reasons why Townsville had its downturn, the Clive Palmer nickel refinery thing didn't help. Lots of jobs lost there, but also the links to the resources sector and the downturn there didn't help. And just generally the Townsville economy went through a bit of a slump and prices fell. So if you own real estate there, you'll be suffering as a result of that. But from this point onwards, I see Townsville as a growth economy and a growth property market, and a good place to buy now because prices are down after a few years of decline. But prospects are going forward. There's a huge infrastructure spend coming up in Townsville. That's the first thing. The new stadium, for example. Then you've got the positive links that it has to the resources sector. A number of major projects are planning to, even though the actual mining venture is some distance from Townsville, they're planning to have their headquarters there because Townsville is it's probably the capital city of North Queensland. It's got an international airport. It's got a very strong government sector. It's got a big education sector. It's got a very strong military economy, lots of diversity there. It's a good place to have your headquarters if you're a mining company doing something in central or northern Queensland. So it's going to benefit from that. It's probably benefiting right now from tourism, which is quite a strong industry in Queensland at the moment, and a range of other factors. I just see Townsville going forward from here. The only thing I say to people thinking of investing there is that insurance costs are higher than you might find elsewhere because of the weather factor. But as someone, Janet, who owns 3 properties in Townsville, I think you can look forward to better times in the next year or two. I certainly hope that's the case, because it's a location that we include in our current edition of the top 5 national best buys report. That's how strongly I feel about the prospects for Townsville moving forward. Matt is asking my thoughts on Raceview in Queensland. Now, I think, Matt, you're referring to somewhere in the city of Ipswich. I just don't have any specific information about Raceview in my head. But Ipswich City generally, I think, is a market that's coming into a period of growth. It's been a very strong performer in the past. Maybe 5 years ago, if you did a list of the top 20 suburbs in the Brisbane metropolitan area for long-term capital growth, probably half of them would have been in Ipswich City. Then it went through a bit of a slump, as all markets do. It's now showing signs of coming back. Affordability is a big factor. Lots of jobs nodes out there. A lot of companies sort of moved out there because the transport links are good and the land is cheap, and you can set up a big industrial business a lot more cheaply than closer into the centre of Brisbane. There's some major master plan communities like Springfield and what's happening down at Ripley, sort of lifting the general standards and improving the infrastructure of the general Ipswich City area. So I think the prospects are pretty good. And, affordability, I think Ipswich City is the most affordable place in the Brisbane metropolitan area. There's more suburbs there with median prices and below 300,000 anywhere else in the Brisbane area. So that's an attractant. So, if you've got affordability, you've got good infrastructure, you've got plenty of jobs nodes, like you've got the RAF base Amberley, for example, which is expanding. You've got all the jobs that are inherent in a place like Springfield, construction jobs as areas like Ripley evolve. So I just think general prospects out there are good, without having anything specific to tell you, unfortunately, about Raceview itself. Just be part of that overall market rise. Dean asking, where do you suggest to buy on the sunny coast for a long-term view to eventually develop and hold? Look, there's lots of potential answers to that question, but I think the Sunshine Coast is a good place to develop and hold. I certainly wouldn't discount a place like Nambour. Nambour is, one of those down market stigmatised places, but I think it's got a lot more to offer than people realise. The first thing about it, it's on the railway line, so on the railway line down to Brisbane. So it's a railway town. There's a lot of really good infrastructure there, a lot of government services, shopping, jobs nodes, cinema complex, all sorts of positive things in Nambour. That it's got a very big hospital. It's no longer it used to be the major hospital of the Sunshine Coast until they built the $2 billion university hospital down on the coast, but still a very major facility, which is also a big jobs node. And it's probably the most affordable market on the Sunshine Coast region. And so it's, people are always looking for affordability and good infrastructure and proximity to jobs nodes. So Nambour I would certainly consider. Beyond that, I think the precinct that really stands out for me is you've got the University Hospital there. That's the southern part of the Sunshine Coast Strip. You've got the University Hospital, and not too far away is the Sunshine Coast University campus. So those two things generate a lot of demand for rentals from students and nurses and other people working in and around those facilities or studying in the university. And there is land available there in emerging suburbs. So that would be an area, if you're planning to do some small development and hold them, that would probably be the place I'd be targeting most of all, that and affordable Nambour. Okay, let me just sort of scroll up and down here and see whether there's anything I've missed. I've covered that. We've talked about Gladstone. We've talked about Mildura. Just bear with me a moment. There's quite a flow of questions there. I'm just trying to make sure that I haven't overlooked any as I've scrolled down. There was a question I overlooked earlier, and it was just a question about housing affordability. Hot topic in the media, probably more than it really warrants. But anyway, Katie's saying, I've seen a lot of commentary about affordability recently. It's probably more or less affordable at the moment. It's confusing. Yeah, well, it is very confusing. It's because media just doesn't know how to report this issue honestly and accurately and with authority, and it's just a mess. And there's all sorts of conflicting reports out about it, and it depends how you measure it and whose numbers you believe, and which figures that the media tends to focus on. There's a quarterly report that's been around for quite a long time. It's a housing affordability report published by Adelaide Bank in conjunction with the Real Estate Institute of Australia, and it's just in the last few days published its latest edition, which focuses on the December quarter of last year. It's found that as a national situation, housing affordability deteriorated a little bit because the proportion of median family income needed to meet average home loan repayments hit 31.6%, according to that report. But it just so depends on how you look at it. The Housing Industry Association about a week ago brought out their latest affordability report and found that affordability had improved in most of the states and territories of Australia, and in 6 of the 8 capital cities. That's the 6 capital cities other than Melbourne and Sydney. Affordability in those other 6 cities was better than the 20-year average. So it was better than average, partly because of low interest rates and partly because most of those places have either had fairly stagnant prices, unlike Sydney and Melbourne, or prices going backwards, as is the case in both Perth and Darwin. So we've seen some improvement in affordability in some places. Most recently, Sydney's affordability has improved a little bit, partly because interest rates remain low and partly because there's been some small decline in prices in the last 6 months, it seems. But I think the significant thing is, and this is also mentioned in the new housing affordability report published this week by Adelaide Bank and the REIA, makes the point that first home buyers now make up almost 26% of the total owner-occupied housing market, excluding refinancing, and that this is the highest rate of first home buyer market share since December 2012. So it's the highest in 5 years. Now that correlates with the latest data from the Bureau of Statistics, showing also that the degree of activity by first home buyers is the highest it's been in 5 years. And then we have the quarterly NAB survey showing that they've been producing those quarterly surveys for 4 years, and the current level of market share of first-time buyers is the highest it's been in those 4 years since the start of those reports. So first-time buyers are actually out there buying in force, and we keep having a media telling us that young people are priced out of the market and that the Great Australian Dream is dead and young Australians are doomed to a lifetime of renting. But it's totally contradicted by the fact that the level of activity of first-time buyers out there is the highest it's been in 5 years. And so the two attitudes, that those two facts don't really align. They contradict one another. And I just think media just loves the storyline of the Great Australian Dream is dead. I know it's very, very hard for young people to buy in the Sydney market, but in most other parts of Australia, if you've got a young couple with jobs and good credit rating, you can find affordable property to buy as a first home, as long as you don't have the attitude that you want your dream home in your dream location as your first purchase, because that's never been achievable, and it certainly isn't achievable now in most of our towns and cities. So, yeah, I think affordability is not the crisis that it's deemed to be by our obsessive media. Just Janine, no, we've already dealt with that, sorry. I'm just going to scroll back down. There's people thanking me for my comments, giving me the thumbs up. Okay, some pretty good feedback there. Thanks everybody for that. Look, it's just clicked over 8:30. We started at 7:30, that's Queensland time, an hour ago, and it might be a good time to wrap this up. I seem to have dealt with all the questions that have come in thus far. I'm going to start to run out of voice if I keep talking for much longer. So I might wrap it up and just thank you for all your questions. And as I'm just getting ready to finish, Marilyn's asking how you come to Melbourne in the near future. Probably, Marilyn, probably. I always leap at any opportunity to go to Melbourne. I'll probably be there sometime in the next couple of months. I did a seminar there late last year, so but there's various reasons for me to come to Melbourne, and we always let people know when I'm going to different parts of the country. My next gig is actually next week in Perth. I'm doing a seminar on Thursday night next week in Perth. My seminar called The Keys to Successful Property Investment. So if you're out there and you live in the Perth area, please come along. If you go to the Hotspotting website, you can click on events and you'll find your way to that event, and you can get yourself a ticket to come to that event. It's designed to be really informative and helpful in terms of good information to make real estate investment successful. And then Saturday week, I'll be speaking at a seminar, someone else's seminar in Sydney. At this stage, I don't have an event scheduled for Melbourne, but it's not to say I won't be coming to Melbourne sometime in the near future. Jenny, just reacting to my comments about Townsville. Yeah, Jenny, I really do think the prospects moving forward for Townsville are quite strong. Yeah, Ryan asking about when I'll be doing one. I did one late last year in Sydney in terms of seminars. The one I'm speaking at on Saturday week is someone else's seminar. It's one of our panel of partners is the School of Renovating, based in Sydney, a very, very good business run by one of our panel of partners members, and she specialises in teaching how to do renovations profitably, and I'll be speaking at one of those workshops in Sydney on Saturday week. Bernadette Jansen is runs the School of Renovating, and it's something that if you're interested in that as a strategy, and I think it's a good strategy, as long as you know what you're doing. It's very important to get to go to a course such as those run by Bernadette Jensen at the School of Renovating, because if you don't know what you're doing and get it wrong, you can actually end up losing money. But if you do it properly and get it right, you can make good profits and accelerate the investment wealth creation process. So that's coming up in Sydney. But in terms of my own events, it's Perth, Thursday of next week in the evening at City West Receptions. So if you're in the Perth area, please come along. I think that's probably it. Thanks for your attendance. Thanks for listening in. Thanks for all those great questions. And I'm going to do this regularly. I'm not sure how regularly, that probably once a month. And it will be ideally at the same time of the month, every month. But given the response tonight for the first one, it's pretty encouraging. There's lots of people out there with questions, and they're all good questions. And according to the feedback, people have appreciated the answers. I hope it's been helpful for you. And don't be afraid to make contact in other ways. If you have a question, I'm always trying to help. Drop us an email, ryder@hotspotting.com.au, if you have a question about anything to do with real estate, and I'll be happy to respond if I can. So that's it for now. I'm going to go and have a cup of tea. Thanks for listening, and thanks for participating. Let's do it again soon. So for now, this is Terry Ryder from hotspotting.com.au signing off. Talk to you again soon.